Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap. We'll look ahead. Not usually wearing a suit, but I had to run from Fox Business. It's been a crazy day. But at least here I get to explain a few things, show you my charts, and give you about 10 minutes worth of technicals and sectors and ideas and thoughts versus a 1-2 blur. But it's fun going on and being with Liz. She's great. I think that they do a good job. Really, not fear-mongering and telling people about the next crash, the next crisis, but more opportunistic. But anyway, as of this morning, we were down 7-8 handles. We put a low in, filled that gap in the S&P we were talking about, came off lows, and we did a little price discovery. Every week we start, we want to do a little price discovery so we know what to trade against just in case things change or just in case things stay the same. You look here at the S&P cash, you will see this trend has been intact ever since it broke this descending channel when Donald Trump was elected. Right there was your commitment to it. From this spot, we've been in this accelerated trend. Sometimes it's fun to trade, sometimes it's boring. Right here, when we broke above 2,300, you had a really nice move. Okay, and then you had a little stair step 1, stair step 2, and then we were wondering what would happen here. Would we fill the gap and continue or not? So as of today, okay, if you brought some risk down into the excitement, or even if on this down day, which kind of engulfed here, you know what? The low here was 2380. So if you didn't get caught, and because sometimes you buy into this and you sell into that because you bought it too soon and you bought too many shares. So anyway, if you got out of some of your longs here, you know what? You had a low of 2375. That was our pivot for today, not knowing whether or not we would close below or reclaim it. And then today went below the 8-day moving average, which has been the trend since breaking above 2300, and reclaimed it. So as of now, I would say more neutral to positive versus neutral to negative. Why? Because we're still holding this trend. If all of a sudden tomorrow we get a red bar that engulfs this bar, now we're back to neutral to negative, and then we might be on our way to this spot, that could have the 21-day. But if, this bottom tail holds the way it's been holding, we could start to move back up. And then now you have the high here. So what did we do? This was 2,400. This was 2,367. So this was 33 handles off the high. Unfortunately, that seems like the norm. So if you're waiting for a bigger dip than that, we haven't had that, during the majority of this entire rally. I think the biggest, high to low, this was 2,300 down to 2,260. That was 40 handles. But anyway, as far as sectors are concerned, they're not all created equal. Small caps are still lagging. You go to the IWM. If you're looking at the IWM and you're thinking because of the weakness here, the market's got to overall, correct. That could, I guess, skew your judgment a little bit. All in all, I pointed out the 50-day this morning that held. If you got out when this gap got filled, okay, if you trade it, moment to moment. I was long on this day, thinking we'd get 2 more days or some continuation to the upside. Instead, we took out this low here of 139.52, and I got stopped out. So I didn't have to sit in the rest of that day. I didn't have to sit in Friday, and I didn't have to sit in today. I could have, if I was more active today, said, hey, I sold 139.50. Let me test a 50-day. And just navigated this inner range. Look how many times you could have navigated this inner range before a nominal new high. Obviously it hasn't had the same fast and furious move like you had here. So at this point, here's your new point of reference for the week. Some people might be long versus 137. As long as it holds 137, some weakness will be contained and maybe it bounces a little bit. What's it called? The IBB pretty much came in and tested this little breakout area, okay, and also tested the 8-day. And now let's see if it could build a upper flag. What did it also do? It did a little red dog reversal. Went through 298.56, went down to 297.91, like 60 cents below, came back up and closed halfway decent. Not a blockbuster close, but commitment to this move. Okay, we've seen lots of little trades here. This was a nice one when it reclaimed the 2-day pivot to go. Here also was when it held the 21-day, and this obviously was the engulfing bar that woke up the biotechs. Now we'll see a little sideways movement. Can it continue to consolidate this move, and maybe it goes again? It does seem as if the bios would love to get higher and fill some of these gaps up here, up to 320 or 340. But first things first. Now it's got to hold higher, hold this do some work above here. How many times it failed over here? Got here, failed, got here, failed, got here, failed. I won't say it again. So we'll see what happens there. Then you have the banks. The banks felt a little exhausting, last week. We told you about that, on that Wednesday. And then all of a sudden, that Thursday to me was a little engulfing and, kind of told me be careful. So, today you looked at JP Morgan, it was weaker earlier, okay, went below the pivot of, what was this, 92? That was from the note, 92.03. Went as low as 91.10, came off the low, and now what does it look like? It looks like the same kind of trend holding the 8-day moving average. So we'll see if this new point of reference is your new low to trade against, 91.10. Did a little price discovery. Now we see if it goes sideways and rolls down or starts to take out today's high tomorrow, and then, that'll help the overall market. Obviously, this trend has been very long in the tooth, but it's still in there. Still above the 8-day, still above the 21-day. What do you want to do when you're above the 8 and 21-day? You want to try and be long, not short. So someone said to me, Red Dog, could you put up a chart of G-Pro? Everyone's talking about it. When did that break trend? G-Pro, Shaq. So many of these new issues in the first 3 to 6 months were on fire until they broke the 8 and 21-day and broke their trend. And what could we have seen? So you go to G-Pro. You got to go way back. First of all, do you invest in anything or sit in anything that's below the 200-day? No. Okay, and this has been below it since 13. All right, if you want to go back to really when the trend broke, okay, that was right here. This was a great trend. Remember, above the 8 and 21-day moving average to start. Okay, that's what new issues, live and die by. Okay, because you have shorts involved, you have good earnings coming out, you have squeezes, etc. So right here is when this trend was born. Then it looks like it got a very wishy-washy, and right here is really where the whole trade changed. It went below the 8 and 21-day, stayed below it pretty much this entire time, came back up, made a lower high, gave you another little tradable rally probably within there, broke trend again, and this was like 50. So if you go back this far, it's been below the 200-day since $50. So sometimes it regains a lower level 8 and 21-day, but then you have to see the obstacles in its way. Okay, so it depends on your cycle and depends on how you trade it. But all in all, this was a really nice moving stock. A lot of people made a lot of money into this ramp up. Some shorts who were early probably got their gajoni squeezed off and maybe didn't make it. But then right here was really when it changed at 70. And then if you got stuck, it came back up. Then you could have got out at 50. And now here you are at 8. Let's go to Shaq real quick. Shaq. You go long term. I remember I was actually short that day, by the way. I was short on this day. Anyway, that was this day. That was that doji top. So, this looks kind of similar where it was wedging in the middle of this range after riding the 8 and 21-day up this entire time, and then it got wishy-washy and basically failed here. And the red line is the 21-day all the way down. Reclaimed it. Everyone said, "Oh, I remember Shaq was awesome." Came back up, and then retested where it broke down from, lower than that, and then boom. And now it's been below the 200-day pretty much for the majority of it. I know I put it on my, morning, my 2017 report as a potential play if it gets above and stays above here, okay, which obviously it didn't do. So anyway, here it wound up, getting hit. But the moral of the story is when momentum leaves momentum stocks, you got to be careful. So, let's talk about Snap. Snap, I was very involved on day one because I said if it opens up, holds above the opening print and takes out the 15-minute high, there could be a trade there. That happened. And then remember on Thursday into Friday, my 26.05 is the high. We get above that. It could squeeze again. Got above 26.05, went as high as 29 and change. Okay, I think I sold it somewhere around there. And then I was like, okay, hands off. Today it was up a buck. Everyone's like, Red Dog, do you think it gets above 29.46, whatever that high is? I'm like, you know what? It's not as compelling. Okay, I'm going to back off. If I had the wherewithal, I probably should pay for it to be short. You guys, I think it goes red. Those were just the quick thoughts. I always give you quick thoughts, and then it's up to you to take the quick thoughts and trade it however you want to trade it. And now, if you look at Snap, basically, woo. Okay, what could you have done if you were long? First of all, I always have the rule: if you're up and you're green and you go red, you get out of the way because you never know when it goes from up to down where it could go. Okay, and if you did go from up to down, this would have been your line in the sand. If this stock was going to have any momentum, okay, and go sideways like we were building, okay, it should never have got below 26.05. It should have held the top end of this 2-day range. What did it do? It broke it. Okay, I know for me, I didn't touch it up here right around 26.05. I touched it once, and I was like, you know what, this is heavy. Let me get out of the way. Broke it, and I didn't trade it again pretty much the rest of the day. And now the only other point of reference you have is this low here, which is the opening low of 23.50. But if you trade actively, 2 nice days, and then today could have been a great day for you to short it. You could have shorted it, versus this high. What did you know? This was the only other point of reference you had, and this was 29.44. So, depending where you stood, if you shorted the open, on whatever that was, Thursday, you might have got squeezed out on Friday. If you traded by a set of rules or pivots, you might have been long or used stops to get shorter than today. You could have got paid. At this point, I don't know exactly what's going to happen here, but if this were to break 23.5, which is the low from what's it called, the first day, anyone who bought it after the open, not the ones at 17, but after the open, probably don't feel so good, and they probably get out of the way, and that could be an extra move. And what happens if it gets below 23.50, goes to 23, comes back above it, and everyone starts adding short here because hey, it's going to 15, it's going back to 17, goes below 23.5, comes back above it, maybe you get a little actionable long once we have some price discovery for a little bounce back. But we'll cross all these bridges tomorrow if you want to cross them. Then some of you guys are playing NVIDIA and AMD, trying to find some kind of low. Doesn't look so compelling, but these stocks do move, and you can make money if you get on the right side of it. So today, a lot of guys were pressing this spot here, saying, hey, this gets below 95.70. It's cooked. Why 95.70? Because that was that pivot low. Small double bottom. If this would have got below it and stayed below it, it could have went lower. What did it do? Hey, red dog reversal. Went below 96.22. Anyone who shorted it below 96.22 saying, hey, this thing's going to get to 90. It's going to get to 78. Well, now they might be like, ooh, maybe I chased it down, and from 120 down to here, it's a better buy than a sell, which hasn't proven it. All it knows is today, it reversed up. There are probably some guys long, and we'll see what happens here next. Maybe there's a scalp trade back to this, and then who knows? Maybe at some point it takes this back, and then it tries to rebuild again. But as of today, it didn't fall below this and stay below it and get crushed. It became a tradable pivot to cover shorts and maybe even look long versus the low of the day if that's the way you played it. AMD also, a troublesome stock. This, not a troublesome stock, but opened up and failed. That was one spot to maybe sell, and then if you look at the size of this candle negating this prior breakout candle, that's never good. And then if you go sideways across with it, if you didn't get out here and here, that was your get out. And then today, and not as much as of NVIDIA, but it did get below this 1238. It almost got down to the 50-day. It didn't, and reversed up. So some of you guys might be trading this for a little bit of a long into there. I did buy some towards the end of the day just to be social with you guys. Hopefully, there's no bad news tomorrow. We shall see. But from above this to down here makes a little bit of sense for a little packing and filling, even if it's going to head lower. But we shall see. But I tweeted right around here saying, hey, if you got out here or got out there, look towards the 50-day to either cover shorts and maybe get long. What they do sometimes is, listen, sometimes what they do, if there's a 50-day moving average, the whole world knows people are watching the 50-day. It's either going to stop in front of it because they don't let you buy the 50-day, or they're going to let you buy the 50-day, they're going to break it below and make it seem like you're wrong, and go, oh my God, I better get the hell out now, and then it goes through it, and then everyone gets out, everyone gets short, and then it comes back above it, and then that's your buyable move, or it stops in front of it and doesn't get there because you're waiting for it, and they don't let that happen yet. So those are the three type of thought process you have to have around the 50-day, around the 100, around the 200. Does it get there? Does it stop in front? Does it take it? Does it break it and reclaim it? Or does it break it, stay below it, and then really accelerate? All those things you don't know until you watch the price action. So anyway, today was a pretty slow day. Oh, let me give you the XLE before I go. I did buy the XLE today. I did go out. This is probably my biggest position overnight. Little red dog reversal here. Still has this descending trend line there. For the first time, it held a little higher. It showed some relative strength today. The Exxon news might be good. I'm hoping that we could actually make some really good money here. How do we make some good money? You bought just say here, you could add there, and then pretty quickly it gets to the 50-day, and then maybe even higher. But for now, it's still a broken sector. It's trying to act better. If you bought it today, you could have a stop at 71.59, and then maybe tomorrow add it above today's high, or maybe you add when it breaks this. We shall see. But there's some big conferences tomorrow. We'll see if more news like Exxon news comes out from Chevron, which is the leader. How did XOM react to it? Not special, but okay. This was your little wake-up day. Came back, tested it, and held. For this to really get going, it's going to have to start getting above it. But again, lots of resistance, lots of moving averages above. This is a laggard catch-up play. So if you're in it long, hopefully if it does break this, you get to get out intraday, and then if it starts to work, maybe it'll help the XLE. Chevron, what are you doing? Hanging in there. Okay, broke above it, flagging again. We'll see if this is the low of the week. It'll be better for the XLE. Some of you guys also said, Red Dog, why are you long Facebook? You know what? It's the strongest stock out there right now. Held the 8-day moving average again. Looks like there could be a trade if it wants to take this out and extend a little bit. So I'm in some because I know I'll be buying it here if it trades through it for some momentum and just for a tactical move. So I'm in some, but not a lot of trades or momentum names look like that. So in closing, if you're tactical, there are things to do. If you sold into the ramp up, great. If you sold the day after the ramp up because we didn't hold that candle, okay. You had ways to tactically buy back after discovery. We all need price discovery so we could all participate with a plan where it's calculated. If you're trying to short all the way up to a level, chances are you can get blown out of the water the same way on the buy side. So what you want to have is points of references on both sides, and then if there's a good chart pattern there, it'll give you some kind of clues on which way to go with it and what size you should be based on this setup. I don't see many A+ setups out there, but there's some things to do here and there if you are very tactical, and if you're very patient and you want to sit on cash because you're not sure, you could do that as well. Have a great evening, and I'll see you at the morning call tomorrow. Bye-bye.